evening, peoples. Boy, what a day. What an initial bloodbath, and then quite a comeback. So I got a lot of comments on that. I'll do to the end, and I'll just get to this for you guys. But want to help you with some thoughts and, where are we going? Hopefully you watch my markets. So we were down on MSTR to 1309. We were down 9.6. Check this out. So take a look at the chart on MSTR. Boy, do I know it well because I missed buying some MSTR by $4. I had an order in to buy MSTR at 1020. And because in the pre-market, it had already gone down to 1,000, I said, oh yeah, I don't want to worry about getting capped if we run back up. I want some MSTR and I can buy it cheaper now before August 8th because I get a 10-for-1 split. So I had an order in to buy MSTR pre-market at 1024. Sorry, 1020. And look at the low here. 1024. But it's one of those things, I'm not trying to day trade it. I'm trying to get it into a bounce. So imagine if I would have had that at 1025 and I got executed, then what I would have done is I had enough to do one contract this way, but I have enough to do 10 contracts if I were to hold it. So I might hold it till August 8th. But again, we can bounce up and we can come back. So I was torn between writing. Look at this. I could, at 1300, I could write a weekly for 1400 and get nice cash. So my downside isn't that great. But again, I missed it. And I'm not literally going to watch it every on a 1-minute chart and all that stuff to figure out. Once, by the time I looked and saw that I missed it, it was already 1100. I said, I'm not chasing it up. I mean, clearly I could have got it 1100. It went to 1309. It went to 1354. But I thought I'd just share with you, and why did I even want the underlying? Well, number one, it's going to be a lot cheaper with a 10-for-1. Number two, with the high IV, I can put on some of my own trades. I probably would just write a covered call as opposed to writing a naked call because the amount of additional margin is just huge on writing the naked call. But writing a covered call when it runs is a nice situation. If I write a 1400 and it doesn't go there, then I get to keep all that. So I start to wheel and do those kinds of things. So very, very interesting. All right, let me get to this. So the reason I was showing you that, not just about what I did, what I'm trying to show you is that's how far down it was, 1024. I mean, you can do the math, it's just massive. But we came back, which happens when you reach levels. And I'll show you something on my MSTR chart at the end. So what happened? Well, they put on the following trades. Let me show you. And it was more about money flowing in. People were buying it because it's on sale. Why wouldn't you want to buy MSTY? I actually bought some MSTY at the same time I was trying to buy MSTR. I got some sub 2030. So I got it, I think was 229. I had that order in at 230 and I think it went off at 229 for 500 shares of MSTY. And I'm not sure if I want to hold it long term, but look at the gain I already had. I didn't want to day trade it. So I think I'll collect the dividend and then I'll have to decide if I want to sell it. And I'll share with you guys what I think we're going to see here so that can help you. So anyway, 9.6 and 8.06. Okay, so we got most of the downside, but again, we're far from being capped. We're the opposite, right? So there were 750,000 shares added. That's just bargain. People are chasing. I don't blame them. They look at the MSTY history of payouts and say, man, why not? I own it at 30 or I own it at 32. Why don't I want to own it at 20, I was ecstatic to get some shares. But again, I haven't decided what I'm going to do longer term with them. So the situation is good and bad. The good is we're winning like crazy on our weeklies. The bad is our synthetic is killing us, as you can imagine. Even at 1309, I can only imagine what it was at 1,000. Okay, so let's finish up on this. So what trade did they put on? Well, they put on the classic three numbers here means they put on an additional 1550. Well, who knows what the price was when we did this, right? It was probably in the 12s because most of the day, here's the daily chart of MSTR, right? So by 10 o'clock, it was already at 1250 and it stayed in that 1300 range. So when they put this on, now ironic, what they sold it for is exactly what it closed for. But you have two different parts of the trade, right? You have the 3071 and the 245, which are both pieces of the synthetic, but look at the difference. So when you're this far below, say 1250, even 1300, 1280, you're way below 155, right? You're 1280 on a 1550. So you're able to buy the call and sell the put and collect a bunch of cash. But guess what? You have that paper liability for 70 contract. And then they sold a 1450 for 27.2. So again, that could have been something I did with mine, but I haven't yet. So I think there's a little more bounce to go, but we'll see. I'll explain that. Okay. So that trade was put on, and that shows up here. I didn't bring the numbers down, but we collected, it cost us 21,000, 214,000, and we collected 1.71. So we got about 1,500,000. So that brought this number from a loss of 8.5 to 7. So we're now in a situation, here's our weeklies, right? I covered synthetics. We have 2,760 at 22.23 and 10.77. Now, this, we could bounce up to this, but I doubt that we'll exceed it again. Now, let me show you something on the chart. I didn't update the chart, but I showed you on my daily that we went to 1,024 for a low. So right now, that appears to be a false breakdown. This is a wedge, right? So these are a flag. And what you don't want to see is a significant breakdown in the wedge. You could come down to 1,000, which we almost did, and even stay there for a day or two and go back on up. And it's sort of a double bottom. But if you break this and stay down lower than this, then it changes really your flag pattern, which is a bullish. And this wedge is bullish. So we really, now I don't, at 1309, we're probably just above this wedge line. So I think we continue to bounce back up close to 1450. And then I'll talk about what I see possibly happening. So here's where we are, right? We're down, but we're significantly up from where we opened in all of this. I didn't even do a volatility. I imagine it's even higher now with that, right? We could be over, but I'll go do that. All right, so let's get to the holdings. So there's the share count from 15,375. This is updated. So let's do all three things. So here's the 750,000 shares, 4.88, almost 5% of the share base was bought. So we close at 24.65. That's saying that's about 17 cents aggressive to where the net asset value is. How'd we do on our weeklies? Well, the one that we sold it at 27.2, and the closing value was 27.2. So I suspect that will drop down unless we move up. But that's not the one that's going to make us any money. This guy, we're 73% in the money. I think if by Wednesday this is 90, take it off the table. I do not trust this bounce more than it being a bounce. I think potentially we go down one time lower. Now, let me tell you what you'll see if that's going to be the case. It's only a probabilities case. So here's our synthetic. That's ugly, guys. 66 million. Now again, that gets fixed if we go to 1450, that's probably only 25 million. I don't know the exact number. I'm just guessing off the top of my head. But if we get up higher to 1550, let me see what BTC is doing right at the moment here. Okay. So, and this is showing 56. So it stayed at the 55 level it was at. So short term, that looks pretty good. Here's my thoughts. So you see all of that, the loss. Let's go into payouts, and I'll tell you what that looks like. And then I'm going to give you some predictive things to try to help you guys. So we now have 19 cents because we added those calls that we sold, and we added $1.5 million in here, even though we put all that into a liability. So we no longer have any money here, right? We got a $66 million loss. This includes all the money that we've been paid this week, and more than likely we're going to make all that money. And we could go up and reduce the 66 back to, say, 35 or 40. So the payout is going to be super interesting. I mean, I'm holding my 500 shares through the declaration, and I'll make a determination. And I think, like a lot of people, if this is $1.10 or some low for Misty, I don't know that they're going to pay two. My prediction was, I think, 201, 209, low two. They could well pay $1.40, $1.50, right? They don't have to pay that. It just, what do they want to do with Misty, the goat for distribution payments, right? In its short life. Does it hit for the cycle? Is this the first dollar payout? I'm going to collect it and then decide later in the week what I'm going to do. So all right. So that now you've heard everything. If you want to go, you don't have to stay. I'm going to give you my predictions and my feelings on what's going to drive the market. The market is going to watch tonight the Nikkei. Remember that the Nikkei is leading us down. The Nikkei sold off because Asia is a day ahead, right, with the date line. Excuse me. So our scenario is one where, what does Japan do? The Nikkei's around 32. I don't have the index up. Could be 33, it could be 34, but low 30s. It's down 20 something percent from its high. Let me pull up a Nikkei while I'm talking to you guys. Just so I can explain it just a hair better. The Nikkei 225. Okay. It is trading at 34,635. So right now it is hanging in there. But again, it topped at mid 42s. So it's a massive drawdown. Why? Because of the whole carry trade in the US dollar and the Japanese yen, them intervening, which has set off sort of a global bust. But the thing that triggered the US initially was the 4.3 unemployment. You guys should, if you haven't watched my video on where are the markets, was there more down, please watch that. Subscribe, watch that, like. That video will outline of what a lot of the concern. Okay. So goes short term what the Nikkei does and how we respond. We've already reported our economic, all of those issues. So the situation is the market needs and wants a rate cut. They didn't get it. It's 100% probability September's the rate cut. If we're not careful here, the Nikkei just goes down a little bit and bounces like we did and starts to come back up. then you'll see the US stock market on Tuesday continue the bounce. It's very likely. Look at some of your stocks. Look at Nvidia. I almost tried to buy some Nvidia, not Nvidia, trying to get some around 91, and I missed it in the pre-market. It went down to in the pre-market, and it looked like in the regular market I had already tried to get my MSTR. By the time I checked, I missed Nvidia because I wanted to put on my own option plays. It's possible we get a bounce here to 120. Could even go to 126. But I think the likelihood these are bounces. Okay. And then I think, almost like an ABC, we pull down, we bounce back up. I don't think we're out of the woods, and I think we go back down. Now, what I think happens if we go back down in that C wave, okay, so your income funds here are going to bounce and they're going to do good. If they go up too much, too fast in the bounce, you're going to get capped again on the following week. But I'm talking probably short term. All this could happen in 5 to 10 trading days. And then it could last 2 weeks. 15 trading days, 3 weeks. But I think we then go down lower. The probabilities say we go down lower on the next move down. And that's where the Fed could determine our fate. If they don't do an emergency cut, if they don't just come out and announce, they won't hold an interim meeting. They may a private meeting, but they won't announce it to you and I. And if they make a determination and vote, maybe it's a Zoom call with all the Fed people, and they come out and announce to the market that they've had a rate cut, we will move up. And I think they would do that out of desperation. The next down move that the market, so they don't want to start an avalanche. They don't want to start more big companies announcing layoffs and fear. So I think at that point the Fed would step in. So the bounce is good, but the bounce may lead us to another. I also think if we have an ugly August, remember I said to you guys, and I said it in my economic, where's the market going, that September is going to tell us, well, guys, if we go into September from this second low and we get the rate cut, we could have a slingshot melt up to where September, October, November, we go roaring back up near the all-time highs and maybe surpass those. Again, it's that stimulus, Does the Fed want to risk going into the election and it hurts the incumbents that they're the reason that they waited too long on the rate cut? Because if you look at the Fed market watch, they're predicting 5 consecutive rate cuts now. So if I'm the Fed, I want to get ahead of this, even though they shouldn't be political and all the rest. So if we get this next move down after a decent bounce here, don't think that it can happen. Don't think this V is right now and we're done. I think if we get that next C wave down, then I think we get the V in September, because that's when all the big money, trust me, the big money knew what happened and they positioned yesterday. They probably bought in knowing that it wasn't going to stay down. I said initially that I was just going to watch. It might be a falling knife, but I chatted with some of the people in my private group and we came to the conclusion that likely we would bounce. That was at strategic enough levels. Just like I think the probability is that the Nikkei bounces. If it doesn't bounce, we'll turn around and go down. Okay, guys, that's what I got for you. You people that are in the income funds, just hold them. Okay. And understand, I get the inverse funds. You can always buy dips. You can always buy fiat. There really isn't an MSTR yet. You can buy a crash. The issue with these big moves, they don't capture them. Don't forget that you think you're protected because you bought dips. Well, dips gets capped also on the downside, just like Nvidia gets capped on the upside. So they're not magic formulas in big moves. They're for the subtle trades. Okay, guys, that's what I got for you. Hopefully this was helpful. Your guess is as good as mine. Nobody can tell you what these guys are going to pay. They're going to have a long discussion, trust me. after the markets on Monday may give them more confidence. If somehow the Nikkei went down and we went down again on, oh, sorry, they gotta do it in the pre-market. But guess what? They're going to make that decision tonight, right? On what they're going to pay, and they're probably watching the Nikkei. Okay, guys, not financial advice. I'm not a financial advisor. Hang in there. Be smart. Don't overreact. Try to stay calm. Okay, guys, bye for now.